The SEC announces that it is suing Coinbase, causing a 6% market pump. What is going on? We've been talking for a while about the lack of volume and volatility in the Bitcoin market recently, but in the last 48 hours, that's been brought to a shuddering end with a price dump of 6% and a price pump of 6%. This all started on Monday when the SEC announced that it was suing Binance. This predictably tanked the market, but we held on and held on well. Prices only bottoming it out at about 25,300K and rebounded slightly through Tuesday until the SEC delivered what they thought was a kill shot, that they're suing Coinbase. And this gave us a 6% pump in the market. Why did that happen? Well, I think CZ summed it up pretty well on Twitter. If you have to pick a fight with everyone, maybe you're the one at fault. We've got to remember that the SEC currently has active litigation right now with Grayscale and Ripple, and has previously had litigation with Gemini and Kraken. I mean, maybe we do have a serious problem here with the SEC. Cameron Winklevoss from Gemini also said that being sued by the SEC used to mean that you probably did something wrong. Now it means that you're probably doing something right. And CZ correctly points out they didn't sue FTX. I think that the market felt the same way. This probably just feels like a cowboy crusade from an agency that's lost all credibility after it cozied up to FTX and completely, utterly, and absolutely failed all of the FTX investors by being completely blind to the criminal enterprise that FTX was engaged in. I'm sure that Binance and Coinbase have done some sketchy stuff, but it's impossible, given the breadth and duration of the SEC investigations against them, that they're doing anything as bad and on the scale of FTX. Gary Gensler, the under-fire head of the SEC, has then really clarified his position for us all, so we know exactly which agenda he's serving. In a CNBC interview yesterday, he went full mask off, telling us, and I quote, "Look, we don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, or it's called the yen. They're all digital right now. We already have digital investments." I mean, I really don't know how to approach the stupidity of this comment. I think the kindest thing that we could say is that it's not up to Gary Gensler or the SEC to decide what we want or what we need. And secondly, he doesn't know the difference between the infinite supply and highly centralized dollar and the completely decentralized and limited supply Bitcoin. Then he's probably not the best person to be responsible for regulating this sector. It's really just that simple. In terms of suing Coinbase for being an unregistered broker, I think we've got to remember that Coinbase is a public company that the SEC itself approved for an IPO back in 2021. Anyway, in terms of the technicals, we remain in this bullish falling wedge, which is ultimately still a very bullish formation. We're going to be expecting to break out of this in a bullish manner at some point. The issue has been the lack of volume, and the SEC has certainly brought some volume and volatility to the market over the past 48 hours. The double litigation by the SEC is represented by these two tests of the lower trend line, and we pumped out of this, as I said, by about 6%, taking price up to over 27,000, up to about 27,300. We've given up around half of those gains today, with price currently at about 26,600. And if we just kind of draw a line in there, we can see that historically this has been a price support. Ultimately today, though, technicals are out of the window. The SEC's unhinged behavior is at least pulling some volatility and volume into the market, and we have a bullish formation. But we're probably going to be best served by just responding to what happens in the news cycle rather than trying to pick a direction. To get our real-time updates, news and alt trade signals, join the Discord. The link is below. It's completely free. Thanks.